Hi there, Shingirai here again with an update on some of the key themes, events and ideas that have been shaping portfolio performance over the last week. As mentioned earlier, we did see quite an escalation in turbulence in the markets towards the end of last week with increased volatility in the equity markets, which seems to have corrected itself somewhat at the beginning of this week's trading. We went and we've looked at some of the areas where we're underweight versus the benchmark, and that would be North American equities, European equities, and US Treasury bonds. And we've just been really introspecting around whether we want to continue to hold that underweight position, which has been normalized across the 5 portfolios to be an underweight of about 3%, or to be adjusting to be nearer to the benchmark asset allocation towards these equity positions in light of the increasingly risk-on environment. Some of the threats, of course, that we've highlighted has been a second wave of coronavirus outbreak, but this seems to be a receding threat, and as economies begin to reopen across the globe. One area that we're really interested in currently would be European equities, where we've been trying to move away from our current position, which holds a broader basket of European companies, and really just use perhaps an ETF that gives us an exposure to the Euro Stoxx 50 index, which tracks the 50 largest companies in Europe by market cap. Another idea that we've been doing some research on would be perhaps looking into specific countries and tracking indices within those countries. For example, perhaps holding an ETF which would track the DAX 30 companies or the CAC 40 over in France. In terms of our overweight positions, we remain overweight to North American fixed corporate income and global high yield, excluding emerging market debt. And also we continue to hold our overweight position in India and in Brent crude, and that of course has played out very nicely for us on a year-to-date with regards to Brent crude and performance. And the Indian story, we're still looking there for a bit more evidence that there has been some increased domestic exposure and some growth coming from that position with the improving demographics and the regulation of the monetary systems, and of course the large population supporting the story there for India.